All right, good morning, traders, and welcome to the live trading
Hold
webinar
icebergs sell GC.
with Scott Pulcini, futures trader. And we do this every Thursday at 10 a.m. It's live trading from a professional. We get to peek over their shoulder and see their ways of trading, reading order flow, and optimizing entries and exits and their trade management. This is critical to understand. So not just analysis, but understanding the trade management and also their psychology or outlook on the markets. You guys know who Scott is. If you don't, he's got tremendous amount of trading experience. Very lucky to have him here. He does offer mentoring services and education. So I'll put this into the chat for you. You can reach out to him directly. Need to go through the disclosures so you understand what you're getting involved in, and then we're going to jump right in to the markets here. All right, so general disclosure, all Bookmap limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Live trading is in simulation demo paper trading mode and strictly for educational purposes. Live trading executed in simulation cannot accurately represent realistic trading performance. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. An investor could potentially lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security nor lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. All right, so with that said, let's jump in here. Let me get Scott's screen up here. Hold on just a moment. Okay, are you sharing, Scott?
No, not yet. Yeah, 1 second.
Okay. There we go.
Got my screen?
Yes. And let me, oops, get it all set up here. All right. You guys should be able to see it. Excellent. Yeah, we're all set. Take it away, Scott.
All right, not much to take away. Not much going on right now. The only thing that's really out of the ordinary is there's about 4 million buy ice coming into bonds. So I've never seen this much ever. So that could signify some kind of obviously big move in here and then trickle into the equities.
And that's not
Well,
much going
so
on. That's
well,
incredible.
well, bonds, yeah. I mean, absolutely. I don't usually trade bonds, but I will definitely be considering it today. Again, what I tell my trade room all the time is, it doesn't matter the market. Volume is volume, and that's what drives markets. And you can be trading bonds, soybeans, ES, and if you're only staring at one market, you're doing yourself a disservice, and you're probably not going to do very well overall because you're going to be forced to trade in bad trade, right? If you're watching 3 to 5 markets, I know some people don't have the bandwidth for a ton of markets, but at least three to five. And then if one market sucks, you can move to the other one because there's usually something going on in the other markets, especially the grains. And then obviously today in bonds, I mean, you can see this. I mean, this zone is huge, but this all started at the. Let's see if I got this right. Yeah, started at the blue lug, which I'll show you here in a second. But you can see, I mean, it's just somebody is buying a crap load of bonds. You got 500 there, 6, 8, 11, 14, let's see even more here, 19, 24, 29, 32, 4,000.
And this is
So,
one individual actor. That's one.
right,
That's
you can,
one iceberg. It looks like. No, I'm sorry. There's multiple.
well, yeah, but you can still see, I mean, a lot of it is one actor, like you said.
Yeah.
You can see that that's the beauty of the icebergs on chart. You can see is it multiple people, is it one house? So somebody knows something, I can tell you that.
RTY
You can
iceberg
see
sell
that.
RT
Yeah.
150 contracts.
So that's the zone. It's pretty wide.
RTY iceberg sell.
When this first started coming in, I put my order in. Uh, 90% of an ATR, I've changed that, we'll go over that, but 90% of an ATR above the zone, I was going to be aggressive getting in, but the buy just kept coming in, so I'm just going to let this materialize, and then once this subsides, we'll figure out how we're going to trade it. But that's a lot. That's the most I've ever seen. So we just sort of Russell fire off here. Let's see what's going on here. Got some sell ice here. That's a ton here. So it's like this is going to be interesting, and it could be showing you something going forward when you're watching this stuff. If you have bonds up and you start hearing the thing go crazy, and then all of a sudden you see, like I said, trickle over to equities, and that could be a nice signal that something big is going to happen, right? And this looks like it may. So threshold for Russell is 150, where I'll draw the zones and trade them. This is 400. That's a lot for Russell. So we'll draw the zone. I'll make it black for sell ice.
And beautiful correlation there too between bonds and Russell.
Yeah, I'm just waiting for ES and NASDAQ next, so we'll see. All right, so quickly you can see bonds. These are Ludwig levels. We talk about them every week now. I use them in conjunction with the real-time volume. Obviously, I use my structure, and we'll go over some of these markets. So I look at the bigger picture stuff here, as far as balance areas, so on and so forth, and then I drill down for the daily trading, the Ludwig levels. Again, you can get them at ludwiglevels.com. She's got 3-day trial. Just say you saw the Bookmap webinar, and she'll have special stuff for you. But as far as discounts and stuff, but these are really, you can see how powerful these are, right? And I don't know her secret sauce. It's obviously proprietary, but she's been around for like 11 or 12 years, and she has many followers, loyal followers, and you can see why. Like whatever she's using, it has. I'm pretty sure it has something to do with market profile, volume profile, pivot points. I don't know the ingredients, and she's not going to give them up, obviously. But all I know is they work, and that's all you got to know. I liken it, and this goes for a lot of things in trading where you see like me using ATR or relative volume, and I don't change things very often, right? If it works, it works, right? I've used this analogy before. If you walk in a room and it's dark, you turn on the light. You don't need to know how the light works to know that it gives you light, right? So if something works, you don't really need to be questioning it. It's not that I just throw things randomly on my chart because they look like they work. I watched this indicator for 8-9 months before I finally started to utilize it, because one of my students went from trading micros to made like $1.5 million in 3 months trading with these lugs, but he wouldn't shut up about them. So I started watching them. We call them lugs because I don't feel like saying Ludwig level every 2 seconds. So we call them lugs in the room. Someone in my room named them, and it stuck. But he kept chirping about him, and I started watching them, and after many months, I'm like, okay, these things work, and they work really, really well when you see the real-time volume at certain areas and so on and so forth. So they are obviously a big ingredient of my trading, and you can see exactly why. Like this is red, this is resistance, this is support. You got all that buy ice in here. It actually is coming in all here, but that's what I use. So let's stop chirping and see if we can trade. There's Russell. So the other thing I use is market profile. And you can see here, so this is yesterday's trade. Didn't really do much. You can see that there, and then you can see these composites. So composites are just days merged that overlap the value area. Overlap, like this is a single day. If you get another one that overlaps the prior, then I'll merge them, and the more days that you overlap, the more powerful it is. So you can see this was a big one. We've already traded through this, but it's still relevant, as you can see. That was the point of control of yesterday's trade, right? So this is still relevant. So you can see we tried to bust out of here, and then now we're back in here. So the way these profiles work, your expectancy is, if you accept into a profile, is to go to the other side, right? So we tried yesterday. That's why I had this split out. Right? We tried yesterday multiple times, and it held out of there. Now we're trying again, right? This is that. We tried, no. Chopped, tried to get out, no. Tried, and just literally closed right here. And now, again, we tried today, and now we're back inside here. So, and this was a prior one as well. So this could get interesting here. Now we have, that you come up with a story or you paint a picture of what's going on. And we'll look at the structure as well. And then you wait for the real-time volume to confirm it. So just looking at this, I know this thing tried again to get out, that this looks bearish to me. Now, if you get a volume set up that's bearish, that just reinforces your theory of what's happening today, and then you look at your levels for targets, which would be the bottom of that, and then obviously the lugs. So if we get rolling here, baby lug, which is, they're not as strong as obviously the blue and the red, but they are important, especially if you have a position on. If you have multiple contracts on, you can get out of one at baby lug, and then this is the ultimate destination where I will get out of all of them. But in the meantime, on the way down there, if this does materialize to the downside, if I get an opposing setup in Bookmap, meaning a bullish setup, I'll get out of everything, right? I don't just ignore setups the other way, and then I'll potentially go long the other way. So we'll see how this transpires. Let's see here. So we are below the yellow lug, I believe, yes. So I take trades aggressively out of these zones below, above or below, depending, right? So if we're below the yellow lug, which is a directional lug, I will take shorts aggressively. If we're above, I take longs aggressively, right? So we're below it. So one, I need to know the ATR. 5-minute ATR is 42.5, so 43 ticks, right? So the bottom of this zone is 44. And then what I was doing, so it's just a work in progress because I keep getting stopped to the tick, as you guys have seen in the hundreds of webinars I do. So it was 75% of an ATR, meaning I don't wait for full ATR to get in. I'll get in, especially when I'm aggressive. It was 75% of an ATR, 5-minute ATR, and then I kept getting ticked, and I went to 80 tick, 90 tick, or 85 ticks. Now I'm at 90. It's not that big of a difference, but it has been helping a little bit where it'll come real close, and then I won't get filled, which could save you big money, just avoiding losses, getting filled to the tick. So it's 90%. So 90% of 43 is 38.7, so 39 ticks. So I will enter this trade, 39 ticks. So 05. And we'll check our size, make sure it's correct. So that's 05. And that's where I will get in that trade. So again, ATR is, or my entry is 39 ticks below. If I get filled, it's going to be 39 ticks above the zone. And then the zone is another, looks like 12 ticks. So that's 78. So that's about 90 ticks of risk if I get filled on this trade, right? So then I want to make sure I have the correct size on, and this is the most important that we talk about every single week. And if you're not doing this, you are going to blow out your account eventually by trading too big for your account. So we said 90 ticks. So you can see here, this is part of my trade room. You can find them on the internet too, I believe, but this is one of the perks of my trade room, having this information. You plug in your account value. You should only be risking between 1.5% and 2% of your account size per trade. So that shows me I could put on $2,500 of risk with this trade. If you're trading micros, you just make this, you can keep this the same. So if you have a $12,000 account, this is actually based on my auto trader. We'll go over that later, but this is the account value of my auto trader. So I can put on $250 of risk and nothing changes because it's just 10%, right? So micros are 10% of the value. So we'll come over here, look at 90 ticks. I can actually put on 6. So that's actually double.
NQI Iceberg by NQ, 151 contracts.
All right, here we go. Bond mania is trickling over. Let's see what's going on here. NASDAQ. It's not quite threshold, but you can see. So I have this on reset mode where it resets every minute, right? So I'll see spikes. So if they, you get, this obviously isn't threshold, it's 131, but and then if this comes in right after in the same area, you can combine the two, right? So you can see this was 131, right there, lower left corner, and then this was another 80, so that's about 200, 210, all in the same area. So I will draw this zone and trade off of it. And then you want to see where it started to spike. That was all the way up here, all the way down to here. It's still coming in, by the way. I may have to adjust the sound, but that looks accurate. Make it blue for buy ice. Don't want to forget my waterboarding tick strike here. So if we get a position on, we get tortured both visually and audio. All right, so that's step one. Step two is we want to know ATR, 39.55. You can see it there. So that's 39.5 points. Plug that in. That's 90% of that is 35.59. So 35.75 points would be 90% of an ATR. So now take a look at our lugs, see if I'm going to be aggressive on the long or short side here. We are, see, we bounce off the blue lug, shockingly, and we're failing to get through yellow. It's directional yellow. We're also failing to get inside this multi-day composite. Yesterday, struggled, finished outside. Once again, looks just like Russell, right? But Russell's accepting. This one is accepting into that other one. This one is failing to get back inside here. So that's bearish. We're below here. So it looks like we're going to get another run at the blue lug. So I will be aggressively short this 35.75 points below here. So just say 36. Make it easy for a second. That'll make it. What would be 30? So that would be, so the bottom of the zone is 37.75. So that's 32.75. So 32. I'm sorry, 02. 02 is my entry. So I believe that's only a 2 lot. We will confirm that here in a second. And I'm getting short right in front of liquidity, but that's okay. All right. So basically 36 points is 90%. So 36 to get in, then I have to risk 36 ticks above this zone, right? And I know, a lot of you are saying, well, that's a ton of risk. Well, I'm adjusting to the volatility, right? And you don't want to, so many traders. I just did a mentoring session the other day, and he's like, I just like to risk 2 points in the ES. It's like we talk about this every single week. It doesn't matter what you want to risk. The market doesn't care what you want to lose. The market cares about these volume areas. So you don't want your stop. Like, if you say I get in here and you only want to risk 10 points in NASDAQ, well, who cares? What is 10 points in this grand scheme of things, right? You want to be risking outside of this zone. I mean, if you say 10 points outside of here, fine. I'll go 90% of an ATR. And that's just from me trading so many of the thousands of these over the last 3 years. That's the best way I've determined to trade this. But if you think you can just get in and only risk 10 points, this 10 points, this is just opening you up to algo city, right? This is what algos do. They run these retail traders back and forth because they don't want to risk that much, mainly because they're trading too big for their account size. That goes back to our position sizing spreadsheet, right? So the point is, you got to place your stop outside of the volume event. That's what's important. You not wanting to lose money is not important to the markets. Just remember that. That's very, very important, right? So anyway, if I get filled on this, that's 36 ticks below. I'll pull my stop 36 ticks above. That's 72 ticks, and then the size of the zone is another 33. So that's 103 ticks of risk. And all you do is you just adjust your size. Again, I know that sounds like a lot, but it's not a lot based on this volatility. This thing can move 200 points, and that's what I'm thinking is going to happen here. So So 102 points, as you can see, once we get into the 70 or 85 points of risk, I can only trade a one lot, right? So
NQ stop sell NQ 152 contracts.
all right, I just got filled on that. I didn't want to get filled because it's a new event, so I'm going to scratch this for now. So make sure this was threshold. So you saw last week we got burned on a trade. It wasn't quite 150, and I usually demand, 150 is threshold if not a lot's going on that day. I like to see 200. So the other thing too is where I should have been cautious on adding this. You want to make sure, right? So if I'm risking 100 points on this trade, well, I get out automatically at the blue lug, and then I wait to see if we draw new lugs, right? That's how powerful they are. Well, what is, so say I got in right there and I didn't scratch that trade and I get in. Well, what is this to this? That's only 60 points. So I'm going to be risking 115 points to make 60. That's not a good risk reward scenario, right? If we were up here, and I got short, well, fine. That's worth it. Even 1-to-1, using these and so on and so forth in the volume, that's okay. But I'm not risking 60 ticks to make 100. So bottom line is, I already scratched that trade because something new came in, but I'm not going to short this with only, again, because I know how powerful these lugs are. I'm not going to short where we could just bounce right off here this close to it. So we'll just let this materialize and we'll move to another market. And what I do, if this is truly bearish, this will come down here, and I'm sure we'll get another signal. We'll make do lugs, and then I can get in and play for the next blue lug, right? So I should have noticed that before I went through that whole thing, but that's good for you guys to see about the risk and stuff. So I'm not entering that trade right now. Basically scratched it. It doesn't mean we're not going down. I think we're going down there, but it's just not worth the risk to me because again, if I put on this short, I have to risk the way I trade with my system. I have to risk 36 points above this. Again, do I want to risk 115 points to make 60? You can, but if you do that overall, you're not going to be a profitable trader, right? You actually want the opposite. You want to be finding trades where you're risking 60 to make 120, 200, 300, right? All right. Let's take a look at this. Yes, is bigger picture stuff. We'll go over all this. So you can see, same thing. Yesterday, Fed minutes, stayed out of it most of the day. Got back up, tried to break out, closed right inside. Today, tried to get it inside here, and now we're right here. That is looking bearish to me. So if I get a signal here, I'm definitely going to take a short, right? Because you've got 30 plus points of until the blue look. So I'll definitely take a short in that situation. ATR in here just to 6.75, so that's not crazy. So just to keep that in mind. So bigger picture stuff quickly. This is what you want to do every morning before you start trading. You just want to know what the bigger picture scenario is as far as structure, right? So this was yesterday's trade. That came out, looked like we were breaking down, put in a huge buying tail. That's bullish. And that was also, what also was bullish about this is a failed breakdown, right? It was bullish at the time. And we came up here, we did rally, and then we just kind of held here. So what I told my room yesterday is this should hold and move to this, back up to this stuff. If this comes back through this high volume node, and especially through this big buying tail after the Fed minutes, or during the Fed minutes, this thing's in big trouble, right? And then this coincides with the spot gamma stuff where we are in a negative gamma situation. We're under 4,500, which is like 44.92 in the which is basically right here. We'll look at it on Bookmap, but below there is a negative gamma where you can see quick down moves. And he said under 4,500 is basically going to be a quick down move to the 4,400 area, and that will line up perfectly with if this fails and this gets through this tail, we're coming down at least to that. And then what you do is you find some structure, and you say, okay, where's the next place that this thing could stop, worthwhile, right? And you can see, like, if this gets motoring down now, and you have little balances here, you got like this one here, this isn't much. But if this fails, we're coming to at least this, and probably back down to this. This was obviously a couple week balance here. Right. So that's bigger picture stuff. It doesn't mean we can't rally, right? Even though I'm bearish. Like right now, short term, it's still holding where it should hold as far as structure. So I always will play both sides because I'm a day trader, but you just need to know, even when a market is bearish, here's a good example, soybeans, doesn't mean you can't have up moves, but the up moves are usually stunted and the down moves are the larger moves, right? So this is still a bearish market, huge balance, multi-week, try to break out, fail breakout. Tried to come back and retake the high volume node of this, built more balance, huge directional conviction, right? So you see, you can have up moves, but they're usually short-lived, and then you get the bigger move down. So what you want to pay attention to here in soybeans is this area. One, this is where this stopped and broke down from, but most importantly, directional conviction. And we'll look at some examples of directional conviction as well from yesterday in ES. But we get back up to here, you really want to pay attention because it's probably going to do that. And if it doesn't do that, that's just information, and then we're going to do that, right? So this is a really, really important area, and it looks like we're headed there. And then you drill down to your current stuff. This is a balance over the last couple days. Now we're breaking out. So this should hold. This is short-term bullish and come up at least to this. If this, for some reason, which it very easily could, I actually favor a failed breakout more than a move up, right? Because of this whole situation. If this turns around and does this,
Untitled Icebergs sells EB 512 contracts.
and then gets through this high volume node, right where this directional conviction started, this thing is coming down here. Right? So this is what you keep in mind when you're trading. And then you can say, if you're a patient trader, you say, you know what, all I'm taking is shorts in this situation. I'm not taking any longs. We're day traders, if this is, and I obviously, like I say a million times a day, real-time volume drives everything. So, if you see a bullish setup, you can take it. But just know where we are in the bigger picture. So let's see what's going on here. All right, so bonds is still in this zone. If you really, really, really wanted to, you could go long. So I tell you guys this every week, right? So back to the NASDAQ example where I'm risking on 115 ticks. Well, you may say that's, I think this is a bullish market. I think bonds are bullish. I'm going to buy, not that you ignore the zone. The zone's what makes this whole thing tick, right? But you could say, hey, we're coming back to the bottom of the zone. I'm going to get in right here and give this a shot and just risk an ATR, 90% of an ATR below here. I don't have to wait for it to get all the way out of here. I'm going to give this a shot, right? The better you get at understanding this stuff, and I highly recommend you trade them conservatively like I'm trading in the beginning. But as you get more advanced and understand them and understand how to understand the bigger picture stuff, you could get in right here. Actually, we'll do that right now. I don't like doing this on webinars. I do it a little bit in my room, going outside of my box of what my system. But this is a good example. Well, let's see if this holds. Where you could give this a shot and get long right here and just risk 90% of an ATR below here. So an ATR is 19, which is a lot for bonds. So 19.39. That's 17.45. So this trades in regular ticks. So you'd still have to risk 18 ticks. Bonds is 31.25 a tick, so that's still pretty decent risk, right? And this is a lot more risky because this has not. So I get this all the time, right? They're like, well, why do you use ATR? I'm not understanding the ATR thing. Well, I use ATR because you want to see when the market, you don't know what setup this is yet, right? I have 6 distinct setups. Is this going to be a Titanic setup, meaning the market runs into like a wall of ice and then runs the other way? Or is this going to be all this buy ice is wrong and it goes that way? That's broken ice. Well, you don't know what this is until it gets out of the zone, right? So the best way I've determined to decipher what this is if it can move a 5-minute ATR out of the area. So when I first made the course, I was using just standard ticks, right? So for NASDAQ, or ticks or points, for NASDAQ, I was using 10 points, right? And gold and crude, it was 10 ticks. At the time, for that volatility, that was okay, and it worked fine. But once volatility picks up, by using the ATR, you're dynamically adjusting to volatility. You don't want to use a strict 10 points, 10 ticks. If the volatility is crazy that day, because like yesterday after the Fed minutes, is 10 points. Is that going to tell you anything in NASDAQ? No, the volatility was crazy. ATR was like 60 points, right? So that's why I eventually evolved to using.
Raw on the forecast of minus 28 billion.
I don't know what that is. Oh, that was natural gas. That's why I've eventually evolved to using ATR. So my point is, yes, you could get long here in bonds and risk just below here. I would go at least 90% of an ATR, but it's still a very risky trade because we have not busted out of this zone yet, right? So we have not determined what this is by a full ATR. So hopefully that makes sense, but that's where that comes from using ATR. You're just adjusting to the current volatility. All right, let's, nothing going on in equities so far. Any questions so far on all that, Bruce?
No, I think we're pretty caught up.
But I know I can probably read the stuff, but it's just too hard to go back
No,
and
no, no,
forth.
no worries, no worries. No, well, we've got two different chats going on in YouTube and in Discord, so some of you guys are answering some of the questions in there, so thank you. And yeah, no, we're all caught up.
All right, so here's natural gas. The number obviously came out. That's what that announcement was right there. This is large by ICE. So this is exactly what I'm talking about. There's nothing going on in equities. How many guys are forcing trades right now getting whipsawed to death by the algos when you can be moving over to other markets? Wow, look at this big ICE in natural gas. There's going to be a big move here. I'm going to trade this today, right? That's what I'm saying. You want to have at least 3 to 5 markets. I get asked all the time, well, what market should I watch? Well, you want to have, probably NASDAQ and ES, or at least one of those, and then maybe like a crude or a gold. I don't really recommend crude or gold right now because of the geopolitical stuff, and it's nonsensical. Like, you have a great position on and something will come across the headlines and it just runs the other way huge. All these markets are geopolitical, I understand that, but those are really sensitive. So when market conditions are normal, I would say a crude or a gold. You definitely want to be watching grains. And the other one is this market right here. This respects these zones. They all respect the zones, but this one, it kind of makes sense, right? So this is probably the most algo-ridden market out there. You can see this, right? Look at this. When you look at a market on Bookmap and you see this stuff, it looks like a Christmas tree. That means it's nothing but algos until the big money comes in. So that's why these zones work. I'd say they work probably one of the best as far as respecting them and then getting huge moves off of them, because when this big money comes in here, these algos get run over, right? And then that's when they turn off the algos. So you can see it doesn't look like so much like a Christmas tree anymore, does it? Well, someone's coming in here and there's some big buy ice here. So it respects these zones even better because these algos get crushed. The big money or the algos' worst nightmare, right? But when does the big money come in? 20% of the time or less. That's what the algos make their money when nothing's going on. We talk about this every week, right? Looking at the relative volume, which we'll take a quick look right now in equities to see what it looks like. It's not terrible. So again, talk about this every week. This is on Sierra Chart. Other platforms have it. I haven't found it on Thinkorswim, but this relative volume is showing you the exact time period of the day and I have it set for the last 30 days. So it's not. Thinkorswim shows you it's a simple relative volume that's showing you just the past 60. So this is just the default. It's based on the past 60 bars, right? So obviously the open, so on and so forth, is going to be elevated because it's basing it on overnight trade, right? This relative volume is showing you something different. It's showing the exact time period for the day for the last 30 days. That's very relevant to be watching. So the point is, when there's no big money coming through and you see this red, so less than 100%, that's when you get this type of trade, right? And then when you see this big, that's when you get bigger moves. So that's what I'm saying in this natural gas. These algos, once this big money starts to come in, they don't like that so much and they turn them off, so on and so forth. So that being said, let's go through our process here. So natural gas ATR is 46 ticks. That's pretty high. And again, because the number just came out, so that's 46.7. So 90% of that is 42 ticks. Okay, that's number one. Now let's look at our big picture stuff. Well, Ludwig's and structure. SNG. So you can see here we are above the L lug now. So I can enter that setup aggressively if I'd like, and then this is my target, right? Let's look at the market profile. So this is a good example on how to do this. I get this all the time too. How do you come up with the composites? Well, here's yesterday's trade. This is 70% of the trade, right? This is the day before. If 50% or more of this value area overlaps the prior one, then you merge them and you make a composite value area. So let's merge this day and then we can get a better look at, and now you can see this is bullish, or could be, right? We're breaking out of this 2-day value. So obviously somebody thinks value is higher, someone or multiple, right? So you have your volume set up, outside here above the yellow lug. I'm missing this trade as I'm chirping. So I'm talking about this market. And the thing is, if you get a runner in this thing, you can make 200 ticks in a heartbeat. So I should have already been in this trade aggressively, and then I just missed. I always forget this market could just rip like this. I was thinking I had time to show you guys that. So 28, 42 puts me at 70. So I should have been in at 70 here. Let's see if I get lucky here and get a
Gold
pullback.
stocks stock by GC, 291 contracts.
All right. What happened to my? Hold on. Not sure what happened to this thing, but all right. I'm just hoping. So we know this is algorithm. Just understand, if you trade this market, you're in for a ride, right? Even if it's, meaning there's a very good chance this comes back and retests this zone. I mean, I'll get in at 70 because that's where I was supposed to be in, right? Aggressively, 90% of an ATR out of the zone, but never chase natural gas because 95% of the time it will come back, at least pull back a little bit. So I'm trying to get filled on that aggressively. So if I get filled, then my stop's going to go. I got to make sure I have the right size on here too. It's going to go 42 ticks below this zone. So 2 may be too many here. So I will stop out. This is at 74, 34, 32. All right. So that's my risk on this trade. And I know that seems like a lot. The volatility is demanding. That's what I risk. Meaning, and if this gets rolling, it's going to easily go that and probably more because you have your driver, which is the volume event. And this is large volume. That's why we have thresholds, right? That's another thing we talk about. Don't get caught up on every spike on this thing. Make sure you know, and that's what my course goes over. I've got like 24 markets in there, 23 markets. It tells you the thresholds for each one. So 300 is a lot for natural gas. It's not a lot for E-mini S&P, right? So you want to know what's substantial. Don't be trading every blip on this SI indicator subchart. No. All right, so now I'm filled on that. My stop's already there. So we'll see how that goes. Let's see. I'm filled on. So wow, I got filled a long time ago. I forgot I didn't put this in. Sorry guys. Let's see if I didn't put my stop in. This is poor trading right here. Don't do that at home. 44 ticks now. 39.6. So 40 ticks above this zone puts me at 96. So I wouldn't have been stopped out. 6 just seems like too many for some
Untitled
reason.
Icebergs sells EV, 620 contracts. Nat gas iceberg by NG, 160 contracts.
All right, so that's a new setup. Now I can either trail my stop or add. I'd like to see over 200 in here. I mean, 150 is adequate. Yeah, I'll draw that. It's good enough. So the worst case scenario is now I could trail my stop, right? This is a new volume event. Draw that. What do we say ATR was? 44. It's 48 now. So this is when you can adjust your stops, right? So many people love to trail their stops so they don't, because they don't want to give their money back. I don't trail my stops unless the ATR is changing. So 43.2 is now the ATR. So we'll say 43 ticks below here puts me at 17. So now I can move my stop up. I'm confused with these zones. Hold on. I do this all the time. That's why I make them different colors, because I confuse them. So this is the first zone that I just got long off of. All right, so 40. So this is.
S&P stop sell ES, 579
All right,
contracts.
here we go.
NQ stop sell NQ, 154
Let's
contracts.
just get this in and I'll come back. So now I can trail my stop to 17. Is that what I said? Yeah. So it's right in the middle of this prior zone, but this is a new event, most recent. That's what you default to. And I can technically add to this trade too. So we'll come back here. I can look at these. Most people want to see the equities. All right, Russell's working. See what's going on in here. So this is coming. This is agreeing with the thesis, right? We just talked about how this stuff looks, or potentially about to be bearish. And this is already, you can see here, we're already violating this high volume node, from yesterday. Again, if we get through this tail, bye-bye. Bye-bye, yes. All right, so let's see. This was 600 stops, 342 ice. You can see these sweeps in here. That was part of the stop run, obviously. My threshold, remember, you want to go with threshold, so you're not trading every blip. For S&P, it's 500. Let's make that yellow. I'm not missing a trade here. It looks like I'm going to. Let's see, I'm hoping we're still above the yellow lugs, so I didn't miss this trade because I would have been in aggressively. Okay, we're right. Oh, maybe not. Maybe not. Yeah. Not so much. Yeah, I missed this trade. So we're below the yellow lug. Setup was below the yellow lug. I should have been aggressively 90% of an ATR. I mean, it's fine. I got Russell on. It's not fine, but at least I have something short. ATR 7.37. 90% of that is 6.63, so I round up 6.75. So I should have been, which I will put this in case it does snap back here. So 7 points below here is 56. 56 quarter. I should have been. Right? Is that right? No, 50. What did I say? 6 3/4? Yeah. 56, 57 quarter. So it's right here. So there you go, short. Got lucky it popped back for me, maybe. Or I could be complaining that I got in if I get stopped out here. So now my stop goes, I think I may have too many on here too. I may have to lighten up. 6 3/4 points above here, so 7 points above here is 72.50, 72.25. All right, so now, so basically 7 and 7 is 14. The size of the zone is another, that's a pretty tight zone. 3, so 17, I think I could have 4 on. 17 points of risk. There you bring your risk calculator. This is the most important thing. I say it non-stop because I'm trying to drill it into your heads. If you're trading too big for your account size, you're going to blow out. So actually I got one too many on. So I can put on 3. So let's adjust that. Where's ES? All right. Let's change this. All right. So short that. Short this. We want to keep an eye on levels here and right, Russell. You want to know all this stuff after you put on the trade, right? We got a ways to go, right? 4, it looks like there's some confluence here too, meaning stuff is lined up. You can see, look at the bottom of this profile, composite on the left there. It's pretty close to the blue lug, right? So if we come down here, I will watch this to get out of probably a couple of them, and then the remainder I'll get out of here. Unless a new volume signal comes in and it's bullish, I'll get out of all of them, right? So monitor that. Obviously, remember I said I was going to get short here, but it just wasn't worth the risk. And I'm short 2 other markets now anyway, so it doesn't matter. But you had more volume events here. This is NASDAQ. You can see these are basically back to back. Let's say this is 105, 153. We'll draw it, but again, I'm not trading until we get new lugs down here. We're too close to the blue lug. We'll look at that here in a second. So this is, you can see the stop run combined. It's basically combining these two, and you can see it right here on chart. It's another benefit of on chart. It really helps you draw your areas. Let's see what this guy's saying. So March obviously was ridiculous with the headlines. It's kind of settled down a little bit, but you still get these ridiculous, and then you get these ridiculous runs, and then for some reason the Fed guys talk all day every day now. So it's ridiculous. Like today, for instance, you can see here Fed Evans speech, Fed Bostic speech, Fed Williams speech. This is every day. Like we talk about it in my room all the time. I just don't remember Fed guys talking that often, and it definitely has been affecting the market. All right, so that's that zone.
Rate increase. The problem is inflation. Because the market has outlook brings additional Fed rate increase. Fed pull-out leans towards it.
Yeah, see, he's chirping right now, so that's what's probably causing this.
I like it.
All right, so this is pretty close to 1-to-1. I'm willing to put this short on with blue lug here. This is, 10, 11 points. I was risking, 17? That's still not the best, but, I'll put that one on. I just was not going to put on NASDAQ, risking 100 points to make 60, like I said. But you can see where we're at. So I will short this if we can come down here, make new lugs, and then get another volume set up, then I'll go short. And I'll have three on. I'm sure that'll work out great. 3 different markets, short, equity markets, because they never do ridiculous bungee jump the other way. All right, so short ES, short Russell. So what do we say? Remember we said about right when we got on? A big move may be coming here because of all this ice in bonds. This one was 550. It's right in the same zone. So now you got sell ice coming. It's probably this buy ice trying to get out of their positions now. But just keep that in mind going forward. You can have bonds up, and if you start hearing a huge size coming bonds, you're going, okay, it's go time in equities. Something's about to go down here, right? Because it usually trickles in equities. Let's make this black. Any questions, Bruce?
No, just
I just want to watch it. I'm probably appreciate that.
yep, just agreement here on lots of Fed speakers.
Yeah, I just don't remember. I mean, I've been trading 23 years or whatever. I just don't remember. It's literally every day. Like yesterday, I didn't understand what's the point of the minutes. They just talk every day. Like, why is that some big event? The Fed minutes.
Yeah,
And they've got 3 or 4 every day lately.
Yeah, it's a way to kind of break the news, like without,
Gently.
Yeah, kind of a little more gently, kind of eke things out.
Yeah. All right, so I'm going to put this in.
RTY iceberg sell
doesn't
RT
matter.
152 contracts.
All right, so this is perfect. What you want, right? Here's a new volume event. Now I can trail my stop. That's over threshold, and I can potentially add to this. We just got to make sure the risk isn't kind of like the NASDAQ, right? Why I didn't put on that NASDAQ short. All right, this is still coming in. We'll draw this now, but may have to adjust. No, it's done. All right, so now what can I do? Trail my stop. You see how far my stop is? Now here's a new volume event, right? You always default to the most recent. 45.1 is the ATR. Take 90% of 45.1. 40.59. So 41 ticks out of here. I'm out of this trade. So 47.98. So look what I can do here. Look how far I can drag this down. That's huge. As far as risk, right? If it pops back up there, I'm still going to make something, right? What did I say? Wait, I said 98. That's not 98. Let me just cancel this and make this a 6 log. There you go. So I basically just saved myself like 100, over 100 ticks of risk because of the new volume event. And I could potentially add to this trade now. Because we're below the yellow lug, I can get in aggressively just as long as my risk isn't more than my potential profit, which I don't think it is. 1979 is the blue lug. Let's wait. Yeah, I can add to this trade. So 41 ticks out of here. Puts me at, what is that, 79? 89? 89. 88. So I can add to this trade at 88. 1988. Yeah, that's right. So that's how you do it. When you get a new volume event, you always trail. So what am I doing here? Granted, I'm not waiting for a full ATR. That would be a bullish event, but I don't need to see that. If this can't hold, something's up, and this is probably done going down for right now, and I'm out of my trade, right? This should continue. If this is a truly bearish market right now, this should hold. The sell eye should win, and it should move lower. If this pops up, I don't want to have anything to do with this trade as on the short side for right now. And then what I'll actually do, if we do get the full ATR and then we retest and fail, then I'll turn around and flip it and go long, right? I know my view is bearish, but I'm a day trader, and it doesn't mean you can't, catch counter trend moves, especially when the real time volume is telling you that, right? So again, I do I want this to pop up here and go? No, I want this to die. But am I going to ignore a setup that turns is a bullish setup? No, I'm out, right? I don't sit there and wish. If I'm trading off of them, I don't ignore them when they come,
Soybean ice iceberg sell.
counter to my position.
153 contracts.
All right, so that's a definite, some type of profit, which is always good. Now, we talk about this every single week. Did I trail my stop because I don't want to give back my mortgage payment, or did I trail my stop based on something that happened in the market? What does the market care about? Does the market care about your mortgage payment, or does it care about real-time volume in the market? That's a rhetorical question. If you get it wrong, then you probably should hop off the webinar. All right, so this is retesting that zone. So if you miss this trade initially, you could potentially, if this comes back, this is a retest failure. You don't always get that. And again, I don't wait for this. This is the conservative entry. I don't wait for this when we're below the yellow lug, right? But if you don't have lugs and you say, I want to be conservative, especially being short these markets, that's understandable. Well, there's your retest. Here's your failure. You can get in at the same spot. The risk is the same. All right, so that's that. Natural gas is not holding that zone. So remember, I adjusted my stop based on this new setup, and now this setup's starting to fail. Right? So I know this was bigger, more size, obviously, but this is threshold. This was the newest event, so I don't ignore this because I want this to go up. Right? So if this comes down and stops me out, then I'm going to wait for something new and get back in. So this is what I'm talking about, right? As you get better with this stuff, you can say, you know what? I think this trumps this guy. I'm just gonna keep my stop just below this zone. I'm gonna give this a chance. I'm not gonna get stopped right in the middle. That's fine. Once again, this is the science. This is the art. This is how I trade it. You can take different methods of what I do and adapt it to your own, right? Just remember, if you've only watched a few of these, you probably don't want to be screwing around with the system. If you've watched 3,000 of them like I have or more, then you may say, you know what, I've seen this enough times. Natural gas, huge volume. This is a quarter of what this volume was, right? Or whatever, right here. This is it. This is a quarter. I'm going to hold on to this. I've seen this too many times. Fine. Don't be changing stuff if you've only watched this 2 or 3 times, though, is what I'm telling you. Recommended anyway. All right, what happened in gold? I maybe missed this, which I'm not too upset about because this market has been silly lately as far as whipsawing. Here you go, 291 stops. Draw that zone. Again, you notice there was nothing going on, and then all that bond stuff happened, and then now everything's firing off everywhere. So you may want to have bonds up, even if you don't trade them. You can know and be ready. If you start seeing 4,000 ICE come in bonds, you're ready to roll in these other markets. All right, so that's that. Let's take a look at lugs quickly. So we're above the red. See if they form new ones. New lugs, right? So I would not have gone long into the red lug, right? Just like I wasn't going to go short in the blue one earlier in NASDAQ. But now we have new lugs. Now, if we get an ATR retest failure of that zone to the upside, I'll go long. And this was looking long in the big picture too. We talked about it. It was looking short, and then it totally redeemed itself. Now it looks long. So let's see what the, we'll go over that here in a second. 24.9 is your 5-minute ATR. So meaning I need to see actually, well, we're right at the, okay, so here's another good example, right? So we built new lugs, but we haven't really, it hasn't really shown what we're going to do, right? We're just bouncing around the yellow lug. When I get that, I still need retest failure. If we're above the yellow lug and I get a setup, I'll get in aggressively to the long side. If we're below, I get in aggressively to the short side. If we're right on the lug and dancing around it, I demand retest failure, retest failure. Right? So this one, meaning I need to see 25 ticks above here. That's the ATR. This was at 93-ish. So that's 18. We did not get up to, I used the last two digits, obviously. So we need to get this to be long set up to 18, last two digits. Down here, retest failure, 90%, then I'll go long. That has not happened yet. And on the flip side, because again, we're dancing around the yellow lug, I need to see 25 ticks, retest failure to go short. So I don't know, this is what I'm talking about. You want to see an ATR out of here to determine what this is. Otherwise, you don't know what this is. Is this a Dumb and Dumber? One of my 6 setups, where this is, if this is just a stop run, is that real buying? Is that buying, or is that just guys puking? It's just guys puking. So a Dumb and Dumber is just the guys puke, no follow through, dies. Stop and hold is when you do get the stop run, and then it holds, and then the big money continues to push it higher, right? We don't know what this is yet. That's what the point of using the ATR. All right, so we're waiting for that. Still alive in Russell, didn't get stopped there. BS is still holding this zone. What's this price? 57.50. All right, so the other thing that fired off was soybeans. It's one of my favorite products. You should definitely be watching grains. So, yeah. There, this was from earlier. That was, you had 2. So you had this. This I was going to go long here, but I was waiting for a retest failure because we were below the yellow lug. We'll look at that. This was a lot. Didn't, just ran away from it. I missed that one, and then this ran into sell ice up here. You can see 256. That's this black zone. This is the most recent, so you could trade off of this zone. It hasn't established itself at ATR out of here. ATR is 2.91. Did we get 3 points out of there? 41 quarter, 44. Nope. So we haven't got three points below here either. So we don't know what this setup is. Is it a Titanic where the market runs into an iceberg, sell ice, or is it broken ice when it goes right through it? We don't know yet. That's why we use ATR. Lugs. See, just dancing around the yellow. So either way, I'm going to demand retest failure of ATR retest failure of the zone. This is bullish. Short term anyway. I just looked at that long term. It's definitely not long term bullish, but short term it is. Many times when markets break out of profile composites, they will retest it and then go, just kind of like the setups. Right?
NQ stock by NQ 181 contracts.
All right, I'm going to delete this zone and draw this new one because it's right in the same area.
Settle on April 18th, US is to sell 30-year bonds on April 13th, to settle on April 18th. US is to sell $46 billion of 3-year notes on April 11th, to settle on April 18th.
Hold on. It's threshold 186. See the stop run. Now is that real buying or is that guys puking? This guy's puking. Right? If this holds and moves higher, then that means there's real buying coming behind it. that's a stop and hold. Just making sure that's right. No questions, Bruce? It's a lot. I've been talking for a while.
Yeah, no, there's been some chatter in YouTube here, but nothing to no direct questions. Yeah, same in Discord.
Okay. So you guys see why I didn't want to short. This is how powerful these things are. I didn't want to short this market. Okay. So we got a new setup, and it's still the same. So this was yesterday's trade, by the way. I just condensed it. We're right in the middle, and this is why it's kind of choppy. Not kind of. Right at the point of control yesterday. So until we get out of this guy, again, this isn't a composite either, so it's not as strong as like this or this prior one. And you can see yesterday, look how powerful these composites are. And this is, if you know these areas and you line them up with real-time volume, lugs, etc., whatever else you're looking at, hopefully it's not too much. Look at this. This was from, this is like 3 or 4 days, 214, right around Valentine's Day. How sweet. Here. Look where this stopped yesterday. It looks like to the tick, right? So it's like, this is what I'm talking about. When markets accept, this was yesterday's trade, right? When markets accept into composites, the likelihood tendency is to get to the other side. This is exactly what this did yesterday. Bounced off there, tried to get in, failed outside, tried to get in, failed outside. This still looks bearish. So we'll see. And this is literally breath holding area for longs. You had this looks just like the ES. Fed minutes, tried to break down, huge buying tail, built more balance, sitting right here. If this thing gets below this and this, you're going to see a big move lower. If it holds, then we're probably going to come up to this stuff up here. So basically, the good night area is probably 14,400. Gets below there, you can say goodnight. Say goodnight to the equities.
Yeah, ICT Learning is asking you about how you read the structure in Bookmap. I mean, if you can just kind of give a brief overview. Yeah.
Well, I don't use Bookmap for structure. I mean, you can see balance areas, but I don't look. I mean, you can see where the trade's back and forth, right? So like this is just like looking at a 5-minute chart, right? You can see that there. That's a balance area, which was basically this. So it's all fractal, right? Balance areas are from 1 minute to 60 minute to daily. Obviously, the longer time period you go. So what just happened here on a 5-minute time period? Broke down directional conviction, came back, retested what? High volume node, put in a selling tail, instant rejection. That looks like that. Again, you got to take this stuff with a grain of salt because it's only 5 minutes, but it's still the same theory, right? It's the same. It's not a theory. It's what's happening. These are traders placing bets. That's what a balance area is. When one side is wrong, they have to puke out their positions. You, as the informed, astute traders you are with Bookmap, you saw that puke right there. That was the, look at that. It doesn't get more clear. Once you understand this stuff, it all makes sense. Don't make trading complicated. These were traders placing bets. The longs were wrong. Here's the longs puking out of their positions. That's this zone. Now we want to see, was that selling just the puke, or is the big money going to come in and start hammering this thing? So far, it was just the puke. But we gave ourselves enough room to let this develop. If this gets back down here and you start seeing selling, bye-bye. So when you understand the structure, it just makes it so much easier to understand what's happening. Don't confuse yourself with 400 lines in your chart. All I use is VWAP. This is standard deviation of VWAP. I'll show you on the other chart too. I use VWAP, I use market profile, Ludwig levels, real-time volume. in reverse order of importance, and then obviously structure. Structure is obviously, number one, you want to know what's going on with traders, but then you use the real-time buying to figure out who's right, who's wrong, what's the big money doing. I tell you guys this every week, my room every day, basically, you have an edge, no other, like, whatever percentage is not using Bookmap, they don't have all the information. Every week I say this to you. They just don't. I don't care how great of a technical analysis. This is head and shoulders. This is blah, blah, blah. This is the 200 moving day cross over the 50. I don't care. That stuff means nothing unless the real-time volume is agreeing with those areas. So this is why this is the most important part. See if that holds. Did I get stopped out of my Russell? Yeah, I got stopped out. Whopping 210 a profit, but that's fine. Whoa, I didn't mean to do that. What did I just do there? I just took away half my profit on that error. So anyway, the point is, it is what it is. I shorted this thing. This should have held. It didn't. I'm out of my trade. I wait for a new setup. End of story. It sucks. I'm still alive in ES. Wait for your next one. Alright, let's see what's going on. Gold. Still hasn't got an ATR out of here either way. We don't know what that setup is. So nothing in crude today. Let's see what the ATR is in here. Where is my ES chart? It's hourly. There we go. Oops. So 7.03 is your ATR. So 6.5 points now is your. So this is what I mean by adjusting your stops. So now I can go 6.5 points out here. It puts me at 72. It's only a quarter tick, but as that contracts, you can trail your stop. Right? 6.5 ticks I meant, or 6.5 points I meant. So 57. All right, so now nothing is going on. See what happened in bonds. Very interested to see how that turns out. So that bias isn't, they're not doing too well, are they? So this is what I mean, right? Like I said, you could give this a shot and get long right here, but you don't know what this is. Whoever was buying here is not feeling real good. And it doesn't matter either, like, they could have been hedging, blah, 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 blah. Again, the area is what's important. A lot of volume transacted here, but once again, traders placing bets. Who's right, who's wrong? Right now, it doesn't look real promising for whoever was buying that, no matter what was going on there. All right, so this is tick strike. Again, all it is it's an audio and visual telling you the size of the orders coming in. It's an algorithm that shows you the size of the orders coming in and the speed, right? And it's from 1 to 15. So I set mine at 11 because I just want to see serious buying, serious selling, right? So this is really good to watch to confirm moves, right? So say you come to an important area where you're debating to get out, right? So maybe it's like baby lug, right? And I'm sitting here. So say we're like in Russell. We didn't quite get down there. I'm sure we're going to go there now that I got stopped out, but it is what it is. Say we came down here and I'm like, I think we can get to the blue lug. Do I want to get out right at the baby lug? Well, then you're watching your tick strike and Actually, it's not a good example because the same stocks, the weighting of the stocks are not the same in Russell, but just for an example, just say that was ES, right? And you don't see any of these firing off on the sell side, you should be getting out. If you see all these getting hammered, you can stay in the trade, right? These are what drive the indices that the futures are derived from. So it would behoove you to have this information when you're trading. Right? So you see, sell, sell, sell. These are the highest weighted stocks in the S&P. If you look at, I'm sure most of you know this, but this. There you go. Now look at that. If you add all these up, look at the weighting. This is S&P, even more for NASDAQ, right? 7, 13, 16, 18, more than 18, 20, 22. So just these 6 stocks, actually this is just 5 stocks, it's like 22% of the weighting. You probably want to know what those things are doing if you have positions on them, right? All right. Now we're trader and trading 3 different accounts as well. So, hold on. Right, so speaking now that while we're waiting for this thing to die, hopefully. So the auto trader, there's been some confusion, not confusion, but people don't understand. They're like, so if you go to my website, the official start date was February 1st, right? You go in here, and you can see this P&L down here, right? It shows every day. So this is based off a $12,000 account. You can see right here, right? And I don't get a percentage of profits. It's just a subscription fee, right? And I don't have to be licensed, and the broker does everything. I just send them orders, not orders, instructions on what to do, like buy yes here, stop out here, blah blah blah, and then they fire them off on all the accounts. But I know people coming to this website are like, well, this is nothing, man. Really, $161, $217, $580. That is pretty pathetic, but whatever. It's still not a losing day. The point is, you can't trade. This is for you to understand for your account. If you have a $12,000 account, you should only be trading micros. So this is a micro. I'm trading micros on this account because, look, if you have a bad day, so just, okay, pretend I was trading the normal size. So it would be 10 times this, right? So if you have a $12,000 account, right, and I'm trading normal E-mini S&P, well, this is, on the good side, yeah, that's a $1,600 day. Well, what about when I have days like this, which happens to every trader, right? So this alone, if you had, so right when I started, I had, I mean, this one was a winning day, but just look at these two. This is over $500 in losses. Well, if I'm trading regular size, that's $5,000 in losses on a $12,000 account. Do you want to trade in the auto trader and have me lose almost half of your capital in 2 days? Probably not. Nor should you be doing this on your own. When you're trading, your account size is this size, you have to be trading micros, and these are good days, right? This is what you expect to make. If I had a $120,000 account, I'm trading $120,000 account for somebody, which you could do if you want to put that in. You could trade the regular, but you could tell the brokerage, I want to trade regular size. But I'm telling you, if I go on a bad streak, again, which happens to all traders like this, you're going to be losing half or all of your account. This is a perfect example why you want to be using your risk appropriately, or you're going to blow out your account. So hopefully that makes sense. Again, these values look tiny, but they're not tiny based on the account size that I'm trading with. So I just want to clarify that because I get a lot of questions on that stuff. All right. What's going on? Hey, there's selling Russell though. Had to run up there, but on the positive side, I didn't get stopped out to the tick, and that's just all the difference for me mentally. I'm perfectly fine with having losing trade. This wasn't a losing trade, but I'm perfectly fine with a stop out. I can't, as you guys know, I cannot stand, and it happens 5 times a day. That's why I moved it to 90%. So at least it wasn't to the tick, but it does suck. I got filled, and then it does that, but it is what it is. At least I have something on short.
I got a question here. I don't quite understand, Yvonne, what the numbers on the dome mean where the price is executed. I'm not sure what you're referring to. Yeah, please.
Was on the dome. This.
Yeah, I mean that's the the liquidity on the ask and then liquidity on the bid there.
Right, these are resting orders. These guys are putting in orders, and they're getting run over right now. But these are guys that want to buy at all these different prices. That's all it is. So there's two different types of orders. I mean, there's more than two, but there's either limit orders, meaning resting in the order book, like these, or market, where you just literally go right to market. Right. So this is just showing you guys that are willing to buy passively. These are passive orders, meaning they're just sitting in the order book. They still want to sell them, but they're not aggressively hitting, selling passively. If the market comes up, they're willing to sell at these prices. They're not chasing the market, hitting the bids or buying offers. And that's what the bubbles are showing you, right? The bubbles show you the aggressive traders. These are the passive traders. Does that make sense?
Yeah, I'm not sure if that's the question, but I didn't
I'm
quite.
sure someone out there didn't know that.
Didn't quite understand what he was asking.
Well, have them clarify, and then we'll.
Yeah, and Bookmap we are showing volume profile as well. If you open up a volume column, which you can, right? So there's many
want me to
volume
do that?
columns.
Want me to do that?
No, that's okay. I mean, I'll put a video in a link in there for the volume column.
Okay. Alrighty. Let's see. They're pretty much doing nothing. There will be a big move out of that area, though. I can bet you that one. Nat gas, I'm still alive, still sitting here. Not get stopped. So this is what nat gas does, right? If you get in a trade, just be ready for this because of see the Christmas tree? That's how it goes. Right? And they rip it back, rip it forward, rip it back, and then it eventually goes. Right? So I survived that. It was right. So if you were saying, again, remember we said about the art, you said, well, I'm going to wait for a retest of this big zone. You got it right there. So gold is trying to get an ATR below here. That's an ATR. 26.4, so 27 ticks below here. The bottom of the zone was at 77, so 50 was an ATR. Talking about the last two digits, that's an ATR. So now, remember we were saying it built new lugs and we were hovering on the lug. So I wait for ATR, retest failure. This is good that they're rating these, by the way, for the ES. We need these to join in.
Soybean Iceberg sells ES 153 contracts.
So retest failure, I will short gold. Soybeans. That's not soybeans, that's wheat. This is soybeans. So more sell ice and basically the same zone. So another 170. I'm just going to make this zone bigger. I know this is the most current. You could make this a smaller zone just based on this, but I'm going to just keep it like it is because it's not that wide as it is. It's only about 3 cents wide, 3-4 cents wide. So now I've incorporated the sell ice. The sell ice, all these, and then this as well. 256. So that's all in this zone here. This is not dying right now. So technically I should not even be trading this time of day. after 10 o'clock Central. I've shown you this many times on my P&L, which you guys should all be using. Again, go to my website, you get discounts to this, but if you see this time of day, I haven't updated. I need to put in my trades from this week, but if you look at the hourly, I showed this last week, right? When you know this information, you know I should probably, and the thing is, I've known this for 20 plus years. We talked about this last week, right? Look at this P&L from, this is actually showing 9, but this hasn't adjusted to the time change. This is basically 10 o'clock Central to noon Central. You can see pummeling. Why? Because that's when it turns into this nonsense most times, right? So the exception I should be using, and I didn't even look at this, I should have looked at it, is I don't trade at this time of day. I mean, it's different when I'm on these webinars, obviously, but I don't trade this time of day unless the volume is substantial. And you can see, not so much, right? Look at that. Remember, this is relative volume. This is showing you the past 30 days at this time period. We're not even getting to 100% for this time period. So what does that tell you? Does it look like we're going to sell off? No. I mean, it doesn't mean we won't sell off. My point is, are you going to get an extended move if there's nothing going on? No, you're going to get algo to death, and that is what that P&L shows you, because that's what usually happens at this time of day. You can see it. So my P&L is like 37,000 over the last 3 months, and I've given away 56,000 at the 10 o'clock period, 10 to 11, and then another 20. So you're talking $80,000 more if I just left. If I just and I used to do this when I was a big scalper, because same thing happened to me back then. So unless you're seeing huge volume come in, you would be very wise not to be trading at this time of day, because these algos will rip you to pieces, as you see, right? So we talk about the winning percentage too. So my P&L would be triple what it is if I just didn't trade this time of day, right? And so this is Trader Sync, and literally it's the best thing out there. I still haven't even tapped into what this can do. Let's see. We show this too. This is good and bad, right? It's not great. Winning percentage of 45%, but it still shows you can be profitable with less than a 50% winning percentage. But how much higher would this? I've got to figure out how to do this. If I took out those trades from 10 to 12, I guarantee that's at least 55, 60%. So why trade in that time of day? There's just no reason for it, right? Again, it's easier said than done. I know you're sitting here and, trade, and it's just hard to just shut it down. But I'm telling you, you stick your finger in the electrical socket enough times that you're going to finally say, you know what, that kind of hurts. I'm not going to do that anymore. So, and there we go. Now it's Algo City. Volume's terrible. The algos know this, right? They know it just like me looking at it. They know when the volume, there's nothing going on. What did I say earlier? Paper, the big money is the algo's worst nightmare. If the big money's not in there, this is what you're going to get. Do you want to play in that? I don't. I want that. You're not going to get that if there's no big money coming in. So I'm very likely to be stopped out of this trade. I'll keep it on because I'm following my rules. And I did put it on before the 10 o'clock period, so I really didn't violate my rules there. But I do not have high expectations when I see the volume do this. This is pathetic. We're barely getting, this last bar was 100% almost. But other than that, this isn't pathetic. I've seen worse, especially lately. But I'm telling you, unless you start seeing yellow, which is over 200%, you should not be trading from this is my time, so 10 to 12 Central. No go. That's my advice. So that's what I tell my room every day. That's why they're paying to be in that room, to get my 20 plus years of experience, good and bad. You don't need to get your head ripped off for the next 10 years trading between 10 and 12. You just say, hey, look at that. Wow, Scott got killed. I can't even tell you how many millions of dollars I've given away at that time period. So do you want to go through that for yourself and learn the hard way, or do you want to listen to me? That's what you have to decide, right? But why do you need to go through it yourself? I'm telling you, it is the worst time of the day to trade. And you're going to, most of the time, unless you trade ranges, which is very risky. I don't trade ranges like that, right? And then the other thing too, I have one terrible day of the week. This is all stuff that you guys want to know for yourself, right? It doesn't mean per se you just don't trade on Mondays, but you say, you know what, Mondays are usually a really bad day for me. I'm going to trade half size, or I'm going to trade quarter size, or I'm going to trade on the simulator on Mondays. It's fine, and then the rest of the week is fine, right? So this is all really, this isn't coincidence. Once you get hundreds of trades in here, right, how many trades do I have in here? You know, it's not coincident. 552 trades, right? That is a good sampling size, right? So you get that information, then you can start making adjustments. This is the stuff you guys need to do if you want to do this for a living. Following risk, trading appropriate risk size for your account, knowing your tendencies, knowing when the market sucks, right? And then following your rules with your system. That's what trading is. All right, Bruce, run out of gas. It's my mini rant.
Yeah, no,
I don't have the ranting abilities like I used to after COVID. I've definitely found once I had COVID in December, like even working out, like if I try to run, I still am not over it. So my ranting abilities are not up to what they used to be either. I used to go on for an hour ranting, as I'm sure you remember.
and they build too. Like you kind of start off and
Right.
yeah,
They snowball into something else.
yeah, yeah. Yeah, no, all's well. We're all caught up on questions and everything here. Yeah, let's we can wrap it up whenever you're ready, Scott.
Yeah, so again, this is not this trade is. It doesn't mean it can't break, but I'm telling you, if it breaks, you're going to see the volume pick up. If the volume doesn't pick up, this thing's going nowhere. You're going to get whipsawed to death, right? So just keep that in mind. Russell, of course, that's the biggest diver right now, and I got stopped out of that. That's about it. Actually, just got stopped out of natural gas, so. But I limited the loss because I trailed my stop based on this new setup, and it didn't work, right? So it is what it is. Oh, we got it. There it is. 5 times a day. 5 times a day. Exact tick. That's what drives me crazy. I don't know if I told you guys that, but whatever. All right, so what is that, Bruce?
No, it's uncanny.
It's. I just literally every day, like I even do mental rehearsals on how I'll handle it, and it's just like I just can't process it. And this isn't a couple months. This is 20 plus years, right? So it gets old after like 40,000 times. All right, so waiting for a retest in gold. I will short this market. Again, what you should be paying attention to is there we go. Something.
NQ stop sell NQ 179
So
contract.
just see these start getting hit, and then the stop run came in Nasdaq, right? So let's see here.
S&P stop sell ES 1076 contracts.
Wow, I can't believe you ever seen this, Bruce. I'm ready to get off, and then all hell breaks loose.
Yeah, it's
All right, quickly. Here's that. So what can we do? Minimum. Trail the stop, right? 7.2 is the ATR. Let's do this quickly so I don't miss this price. 6.5, 6.5 points out of here. I will stop this so I can trail my stop now. It was 70 something. Now this is 54. So I can move it to 60 half. So I just saved myself, where's my order? 12 points of risk. And this is very likely come back and stop me out after what we've just been talking about. But that's fine. Now I'm gonna lose 4 points instead of 15. Let's see what the line looks like here. All right, picking up a little bit, which is good. It's not crazy. Still don't recommend trading at this time of day unless you start seeing 2 times or more, but that did get over 100%, so maybe we can get some follow through here. I doubt it, but we'll see. That That was a nice puke though. That was the remainder of the guys holding their breath. That's what that was, right? Which is always fun to see because I always want this thing to die for some reason. That was your balance. Here's your first puke. Whoever was holding their breath came back. They're still holding. They're like, oh no. Okay, got a puke. That's what, guys, if you think there's something different going on in these markets, that's what trading is. That's what markets are. It's guys placing bets, big money placing bets. They're right or they're wrong. Guys are wrong. You have to puke. All right. Well, we'll stand a couple more minutes now because something happened. Let's see what happened in NASDAQ. Happens every time I go to get off these things, something happens. This was only 126. I know I read more, but it's not showing. Nothing doing in NASDAQ, and I know we're at blue lug anyway, so I wouldn't be shorting that. Anyway, let's take a look here where we're at. I like that they're buying the VIX. That's a good thing. That's something different that hasn't been going on today. And look where we're headed. I'm about to get out of this actually. Because I don't mess around at the blue lug, right? Anywhere in here. $48.5 to 47. See if we can get a swipe down there and I'm out. I don't mess around with the lugs, right?
US 4-week VIX ratio coming out at 3 to 38, 3 to 38 compared to the previous 3 to 100.
All right, anywhere in this area, I will. If I see blue, meaning market buying, I'm going to hop out of here. I know this is a new setup, but guess what? If this is valid, this will move down. We'll build new lugs, and then I can play retest failure of this zone and get back short. I just don't. I know how powerful the lugs are, and I do not mess around with them as far as trying to hold into them. This is pretty close. I'm out. Not a huge profit, but not bad. So we weren't quite at the blue lug, but do I need to try to milk out another 2 points to potentially, especially again at this time of day, to watch this thing go like that? No. So it's fine. I'm fine with that trade. I thought for sure that was going to be a loser because of the time of day. Get out of this. Of course, I missed it on my other account. All right, so now what you want to watch, this was still 1,000 stops. This is still a valid setup. If you want to trade at this time of day, the volume is okay. If you're using Ludwig levels, aka lugs, what I'm going to do if I decide to trade this, which I'm not supposed to, but I may, if the volume picks up, we come down here, we build new lugs. Say we build new lugs, we retest that volume setup, and then I'll go short. But I'm not going short, and I just got out of my short because of this, because I've seen it too many times. But our thesis was right as far as the profile and everything else, right? So, but I can tell you what, if this thing goes a little further, bye-bye. If it gets below this tail, which is only about 5 points lower, you're going to see volume pick up. I can tell you that. I'm really glad I got stopped at this, Russell. That would have been a real nice trade. But that's trading. I follow my rules. The only time I get upset, I'm fine with stop outs, except to the tick, and I'm fine with being wrong as long as I'm following my rules. If I break my rules and it costs me money, that's when I get very upset with myself, right? Guys, again, every week, same thing. Markets are 80 to 90% algos. You need to trade like an algo. You have to have your system, your rules, and you have to follow them. If you don't, you're not going to make it because the algos will take all your money, 100%. All right, that's it. I'm out. Hopefully you guys learned a little bit today. Be careful until it starts to pick up again. And that's all I got.
All right. Well, yeah, I think we're all caught up here. Yep. So, yeah, thanks, Scott, and good trading, and we'll catch up next Thursday.
Cool. Thanks, Bruce. Appreciate it. Thank you, everyone, and I'll see you guys next week.
Okay. All right. Take care.
Thanks, you too.